So hello everybody, welcome back to another free webinar hosted by A1 Trading. I'm Amy and today I'd like to talk about fundamental analysis for Forex traders. All right. So as you all know, when you start off your career as a day trader, you learn all these things such as, risk management. You learn something about chart patterns, about candlestick patterns. You learn something about trading psychology, which is also a very important topic. And then you learn something about fundamental analysis. It doesn't matter if you are, even a technical analysts, it does make sense to know something about fundamental analysis. I myself, I'm not an expert, but I have learned the basics of fundamental analysis. And this is what I want to cover today. Let me see if anyone has joined today's program. So hello, everyone. Yeah, I just can't see who has joined today's program, but doesn't matter for now. I will just start with what I have prepared for you. As I said, fundamental analysis. And I actually want to fully explain the logic and the very idea of NFP, PPP, CPI, and interest rates. And I do want to explain the logic. I don't want people to trade, numbers, because that doesn't make sense. Macroeconomics is such a complex topic. All the components are so intertwined. You can't just wait for a number and then trade that. And this is what I want to clarify today. Now, but before we start, I do have a question for you. Now, can you give me, I don't know who is watching now, but can you give me a simple, stupid definition of fundamental analysis? What exactly is fundamental analysis? Give me a definition, please. All right, that's a bit disappointing. Okay, now a simple definition of fundamental analysis would be, it gives you an overview of the economic development. That's something, to bear in mind. But when we, as traders, today's topic is about fundamental analysis for Forex traders, for traders. Now that means we are going to focus on those components happening in the economic field that are related to the monetary policy, that have something to do with money, right? Now, my second question is, why do we do fundamental analysis? Why is it so important to do fundamental analysis besides, technical analysis? Why exactly? I now have no idea to what that refers. Now, let me ask you once again, the question, why do we do fundamental analysis? It's not about news. Do you want to become, are we trying to become journalists, or are we trying to earn money on the stock market? It's not about the news. I'm looking for another answer. Why fundamental analysis? Why is fundamental analysis so important? Economic events, well, yeah, but am I now here to collect, am I just going to read the news? What am I waiting for? What is it that is so interesting? To have a better chance risk. It has impact on the Forex market. Yeah, all right. So it has an impact on the Forex market, but the main aspect is understand market sentiment. Yeah, for example, exactly, right, exactly. To understand the overall sentiment. At the end of the day, all these events, economic events, are going to have an impact on the traders' sentiment, overall sentiment. That means it's going to answer the question, am I still believing, do I still believe in GBP as a currency or not? That's always the question. People sometimes say there is a problem in Afghanistan, there is a problem in Iran, there is a problem somewhere else. Why do you care? I mean, as a trader, right? The question is the problem that has happened going to affect GBP as a currency? That's always the number one and the only existing question. Is this going to make you feel like that you no longer believe in GBP? Yes or no? This is it. Now, let me read the answer. This is a lengthy one. Fundamental analysis can give you more context in your technical analysis. Yeah, I do agree. It could also provide additional confluence to your technical analysis. Exactly. So what I want to emphasize is this one right here. It gives you some sort of, information about the economic cycle, about the business cycle. What do I mean? Now, some certain aspect, I have already said it, right? Certain aspect of the economic cycle can be seen on the Forex chart again, right? Not all of them, as I said, only the ones that have an impact on the question, do I believe in a currency? Yes or no, right? Here, for example, what we can see, this was the debt crisis, the European debt crisis. Yeah, that was the European debt crisis. This is something that was also a component of the economic cycle. So here we have parallels, right? It's not always that a certain cycle on the, it's not always that you have one-on-one the economic cycle on the Forex chart. No, but certain aspects can be seen on the Forex chart. The problem is, I mean, there is not a problem, but the challenge is that on the Forex chart, you can see multiple things, and that makes it difficult. You don't only see some aspects of the economic cycle, but you also see, for example, something like that. What was that? Well, these were the countermeasures of the Swiss central bank, and they actually changed their monetary policy. Here they changed from floating exchange rate to fixed exchange rate. And this is what I also want to say. So that means, besides all the economic cycle events, etc., you see multiple things. You see, for example, the exchange rate here, as I said, the Swiss central bank decided to move from the floating to the fixed. Why? Well, the problem was because CHF got stronger and stronger. And if you have ever been to Switzerland, it's such a small country. Usually, you can just, no matter where you live, if you live in the south, in the west, east, doesn't matter. You can just, by car, you can basically go to Germany and then do your groceries there. Because, Swiss franc was getting stronger and stronger. So they needed to do something. And this is also something I wanted to mention, some currency pairs, and that's the reason why it doesn't make sense to trade the fixed currency, the currency pairs which have a fixed exchange rate, because they don't have a high volatility, right? Like here, let me show you an example with the Danish krone and euro, where you can observe a fixed exchange rate. This makes it quite difficult to trade. Major Forex pairs usually have a floating one because it's traded within a wider range. Now, this is just, I just thought that might be an interesting side note. I don't know, sometimes, people are joining this webinar who are just fully, who are beginners. So I just thought this might be interesting for them. Now, what I want to focus on today is, what I want to focus on is on a couple of topics I've picked for you. As I said in the introduction, I don't know if you have heard this, I'm going to focus on, on the leading indicators and lagging indicators. Now I'm going to clarify the question how to trade these, the data, right? And I'm going to focus on NFP, PPP, CPI, and interest rates. I do want to explain the monetary policy, and the idea is to explain the logic. Now, my question to you, as I said, you see on a chart, you usually see multiple things. You see some parts, some aspects of the economic cycle, but you also see the monetary exchange rate, the monetary policy of a country. My question is, what else moves the Forex market? What would you say? Let's collect a couple of topics. Besides CPI, PPP, NFP, etc., what else moves the Forex market? Wait a moment. Oh, here you are. Yeah. So what do you think? What else moves the Forex market? Exactly, buying, selling pressure or supply demand pressure. Yeah, that's right. Interest rate for sure. And that is, I'd say, and I actually talked to a couple of people who even work as investment bankers, and they say focus on the interest rate, just try to understand the monetary policy, and that's it. Real versus actual data, yeah. Non-farm payrolls, exactly. And this is also what I want to talk about now. So let's start with that. These are a couple of topics I've collected for you. I don't know if you're very interested in fundamental analysis, you can actually do some self-study. You can basically, do some research and learn more about these topics. This is just, a collection of topics you may want to study, and that's also sometimes very interesting to know what do I need to know, etc. I am going to upload this handout after the webinar, so you can just download it from my Google Drive, and then you can do some self-study if you're interested. Now let's start with the economic data, NFP, etc. Now, as I said, to first of all clarify, in order to make sure that people who have just started with trading, they might want to know what NFP is. It is. Now, let me ask you, what is NFP? How would you explain that to someone, to a beginner? What is NFP? Why is NFP important? Let's say I have just started with my trading career. Now I'm learning something about fundamental analysis, and I come up to you, Chris, for example, and then I ask, well, tell me something about NFP. What is it and why is it important? Let's say I have no idea whatsoever, especially non-farm payrolls, right? How do you explain that to someone who doesn't know much? Yes, I can wait. Guys, come on, talk to me. What exactly? Give me a simple explanation of non-farm payrolls. And don't say, wow, the name already indicates it. Let's say shows the growth or shrinkage of employment in the US. Exactly, employment in the US, of which sectors? The sectors are here, right? The secondary and tertiary sector right here, service sector, finished goods, this sector. So it's quite a big sector. That means it's quite an important number. Nonetheless, I wouldn't say that you can trade the number. And I'm going to explain why I think that. Now, that means what I would do is, now the problem with NFP is, we said it's, these two sectors. The thing is, let's say the fewer jobs got created, right? Fewer jobs got created. The problem with that information is the information alone doesn't say much, right? It just says the economy is not doing very well, for example. But it also says that companies don't have that much money to invest into creating new jobs. That says something about the monetary policy of this particular country. It says something about supply and demand. It tells me something about whether, it tells me something about the interest rate. So I can, based on the NFP numbers, I can already start predicting about, for example, what the Federal Reserve is going to decide. Yeah, so based on the numbers, I already might want to start guessing, not guessing, but predicting and trying to understand what is the Federal Reserve going to decide when it comes to the interest rates, rather than just sitting there waiting for a particular number to be released. It doesn't work like that, doesn't it? That means what I would do is, as I said that in the very beginning, I said macroeconomics. It's such a, wide field, and it's such a complex field because all these data is just intertwined and connected. That means in isolation, the data itself doesn't, express much. And that's the reason why it makes sense to ask yourself, what type of indicator is this? Is this a lagging indicator or is it a leading indicator? If you know that, you know how to go about trading a particular data. you know, I mean, the logic of the data, not the number itself, but when you know, oh, I know in the back of my mind, I know in 1 week there will be a Federal Reserve decision on the interest rates. So that means based on what I already know, based on the NFP numbers that I already have, I can now start reflecting about that. So knowing what type of indicator you have, lagging or leading, is going to give you some sort of, you know, information how you can actually basically trade that particular chart based on your knowledge, on your technical analysis knowledge. Now, a lagging indicator is an indicator that captures and tells you what has already happened in the past, and then they say, voila, and that's the number, right? They say this has happened in the past, and this is the exact number. And did you know, I mean, I'm quite sure that you know that traders usually, you know, it's not about the exact number that gets released. It's usually the delta, you know, the difference between the expectation and the actual number that triggers a certain movement, plus the overall sentiment that was already existing. Now, NFP, PPP, CPI, those are all lagging indicators. Those are all lagging indicators. That means they capture what has already happened, isn't it? Right? So NFP, for example, it's always, the number is always released on the first Friday of the month. That means they tell you how many jobs have been created in that particular month. But it is somehow, you know, you can't trade the number itself. It's not going to help you, because it's basically looking back to what has happened. And the leading one is predicting what may happen. And this is now an important thing I want to show you, because we had the Fed decision. I don't know what you did, but I had positioned myself very early in this region right here, in this zone right here, 36. And I do want to explain that. Now, what you have to do is, when you, as I said, when I have a leading indicator, what I do is I start looking for opportunities for, you know, buying or selling opportunity. I basically make sure that I can position myself as early as possible. This is what I usually do when I know I'm waiting for a leading indicator. The problem with leading indicators is, you know, a couple of 2 days before the number gets released, market slows down really. So that means you can't trade it very well, but it is usually very useful for you to position yourself. Now, this is something I had discussed in another webinar. If you had watched this, I talked about candlestick patterns, and there I said, one rule I always apply is when I'm very close at a very important support zone, which is also a psychological zone, what I do is I basically, and this is what has happened here, right? What I usually do is I basically observe what has happened on that zone right here. And what is very obvious in our case is we had a directional move after this candlestick pattern. That's the monthly chart, by the way. And then we had the zone got touched 3 times. 1, 2, 3. That means I knew if this zone breaks, that actually means either, you know, it's got, if it breaks, it will have a major impact. But if it doesn't break, this basically means that there we can expect a major movement, a major price movement, because it's not just any zone, it is a well-respected support zone on the monthly level. It is a support zone that has been touched not only once, not twice, but a 3rd time. That means there I can actually expect a certain movement. So I check the weekly chart, and then I basically hit what I didn't like is, or what I saw here is that, you know, we had a price movement to the upper side, and then it got rejected twice. It got rejected twice, which doesn't mean much, because we are stuck in a sideways move, in a sideways market, in a range-bound market. So this only means that this, you know, it's just a directional move. It's a directional move to the support zone, because here we are still in the middle of nowhere. So it moved down, And yeah, I'm not going to talk about now trades because that's not today's topic, but this is what I mean when I say see the difference between lagging and leading. If you have a leading indicator, look for a good opportunity. Position yourself as early as possible. Exactly. Let me see if there are any questions. Nope. All right. Let's continue. Now, I do want to say something about the monetary policy, about the basics, right? Because let's say, I mean, Forex reacts sensitively to monetary changes, to any type of change that is related to the very question, do I still believe in that particular currency, yes or no? No matter what happens on this earth, it's always this question, right? Do I still believe? Do the traders still believe or not, right? And here it's the sentiment. It's not, sometimes it's even not the actual data, but it's the overall sentiment. Now, my question is, let's say Bank of England raises their interest rate, and this makes investments in GBP what? If a central bank raises their interest rate, what does that mean? What type of, or what implications do I have here? Wait a moment. Oops. That's my Zoom, isn't it? Yeah. As one of the... What does it mean? No, I mean, is it more attractive if, what was the scenario? Wait a second, I forgot. If Bank of England, let's say the Bank of England raises their interest rates, right? This makes investment in GBP what? Parking my money, maybe the wording is maybe not correct, right? Parking my money is in GBP is now attractive or less attractive? Good investment conditions, exactly. Because now when I park my money, let's say I park my money, now let's say the interest rates got increased, right? I take my money and basically invest or park it here, what we had, you know, with GBP CHF, for example, or where was that? Not this one, nope. Oh no, that was on one of my, yeah, it doesn't matter. It was here. Wait a second. Yeah, for example, here, right? And that's the problem with CHF. It's the safe haven currency. No matter what happens, people always take the money and then park it there. So when the interest rates get increased, the situation is that this makes parking your money in GBP more attractive because you will have now higher returns on that, right? You will have higher returns. And you will have higher returns. Now, another thing is, because another thing is the wording, because I don't know about you, but when I look for, you know, when I basically read the newspaper or when I look for data, etc., you also need to try, or you also want to understand what has actually happened, what was the decision, etc. Maybe if you are an expert, that's good for you, but I'm not an expert. So what I'm usually looking for is when I, you know, read the interest rate went down, the words they use is for that is an expansionary monetary policy. That stands for that the interest, not interact, but interest rate went down. And if it's the interest rate moved up, this is about when they use words like restrictive monetary policy. I just thought, you know, this might be also very interesting because you're reading and you're just maybe not, or it's not clear to you, these are the words. And here is a link, actually, you can click on that and then you will see different articles about monetary policy and go through these articles just to study and try to understand what you're reading. I just thought that might be also interesting for you. As I said, I'm going to upload the handouts later on. Now, and the question is, you know, and someone else wrote, right? Oh no, what was that? So if you have an increased, sorry, when you have an increased interest rate, right, an increased interest rate, there will be a higher demand, because people know if I park my money there, I will get more for my money, right? So that means this, yeah. So another thing is this point right here, the case study. Now, let's say in your country, wherever you live, right, there is high unemployment. There is high unemployment, yeah? Now, my question is, what will the central bank in your country do if there is high unemployment? What are some, what will they do? Wait a moment, I can't see your... Let's say there is high unemployment. What's going to happen to the interest rate? High unemployment. No jobs or fewer jobs got created. What can I expect when it comes to the interest rate? Lower interest rate. Exactly. They are going to decrease interest rate because of what? Because what happens to the loans? Reduce the rate, yeah. What happens to the loans? They get lower interest rate to stimulate growth, because the loans, loans get, no, they are more attractive. I mean, they get cheaper, right? Loans. I wouldn't agree on that, because imagine that the interest rate decreases, right? Loans automatically get cheaper. So that means now basically businesses, especially small businesses, right, would now maybe attend, all right. So that means in that case, they would now be more interested into taking a loan, applying for a loan, and then creating jobs, probably, right? So that means that means more money is, how do you call it, printed, right? Or so there is a higher supply when it comes to money. There is more money available, right? So that's gonna hopefully boost the economy if the loans get invested into new plants, devices, projects, into new jobs, etc. In terms of investment, however, loans are not. Yeah, that is true. Yeah, absolutely. Yeah. And then I've got another question. Wait a second. Now, we said fewer jobs got created. The economy, I know this is stupid. This one is stupid. I just thought, I mean, when fewer jobs got created, the economy is obviously doing not very well, isn't it? So I expect the central bank to, we already clarified this, to decrease their interest rates. Now, the problem is that, when you see the number, when you see NFP, right, is the number of jobs that got created. And when I see that fewer jobs got created, I understand that the economy is not doing very well. That means I can already think about what central banks are going to do to fix that problem, right? So I may expect now the central banks to lower their interest rates. And what I think is brilliant, A1, for example, A1 trading, what they usually do is, they ask questions on YouTube, for example, what do you expect? Do you expect this to be hawkish, etc.? So that's absolutely brilliant, because they want you to be one step ahead. They want you to already start thinking about the price movement that may happen, right? It's too late when you're just waiting for a particular date, or when you're waiting for a number to be released. It's all about positioning yourself, is what I would say, right? Be careful. If you have a different strategy, then just do whatever you think is better for you. At the end of the day, you just want to make money, right? It's not about right or wrong. It's about what works better for you. That's always the number one question. Yeah. Now, one last thing I'd like to say. So I don't know. I mean, I have already clarified everything. Here, I know I said I'm going to talk about NFP, PPP, CPI, but what I'm trying to say is what I do, as I said, I studied applied linguistics. I'm a lecturer for applied linguistics. I have not much idea of macroeconomics, right? I had a trading mentor, so I learned a lot from him. But what I am trying to say is I'm trying to draw your attention. I hope you do understand that I'm trying to draw your attention to the logic, right, to the idea. It's not about let's clarify what NFP is, what PPP is, CPI is. What works for me is I just clarify what type of indicator. Is it a lagging one? Is it a leading one? If it's a leading one, I know, oh, I expect the market to slow down before the data gets released. I know this gives me the chance to position myself. And if it's a lagging one, wow, that has already happened. Whatever it was, it has already happened. That particular month, I was already trading. Wow, good for me if I didn't see the NFP number, right? I didn't have a look at expectation and the actual number, and I say, oh, all right, there is some sort of a difference, blah, blah, but usually it doesn't really impact my trading. This is, I'm not, yeah, you know, this is what is in my case, what works in my case. So I just try to understand, oh, what type of data is this? What are we waiting for? What type of, you know, what can that trigger now? I try to understand the overall idea. And what I also then do is I usually use, I said be one step ahead to try to think, you know, what can happen? What does the NFP number, what are the impacts now? Here, that means try to focus. What works very, very well for me is when I focus on the monthly and weekly level then, right? I just check from a technical analysis perspective. I just check on the monthly level. As I said, with this scenario with GBP USD, right? Where was that? GBP USD, the monthly level, right? I knew, all right, there is a Federal Reserve decision. And then I was thinking to myself, well, is this now a good chance? Do we expect a certain movement here? It depends on, and then I saw that there is an important support zone, a psychological level, plus it got touched 3 times. That means I for sure expect a movement either into this direction or into this direction. That was for sure, right? So then you can basically position yourself. And then, yeah, that means higher timeframes are quite useful when you are expecting such a big, you know, data. That's one thing. And one thing that has always helped me, I mean, that's not going to work if you are into scalping, for example. That's not going to work, I guess. I have no idea about scalping, to be honest with you. But you usually have an investor mindset. Think in long-term movements, not just, you know, candlesticks. Oh, this has happened and that has happened. And also don't get distracted by all this data as well. And then it's about higher time frames. It's about having an investor mindset, and it's about the overall sentiment, right? Sentiment, investor mindset, and time frame, the higher time frame. These 3 things can be very useful, actually. And whatever happens, I always ask myself, does that now mean that people are losing trust in GBP, yes or no? For example, if I trade GBP USD, right? That's the number 1 question I ask myself. The Forex pairs I trade, does that now mean that they're losing trust in that particular currency because of this and that decision, right? Have an overview of the news, but always in the back of your mind, the number 1 question is, what type of impact is this going to have on a monetary level? Just because there is a war somewhere else, what does that mean for CHF? Nothing, for example. Yeah, could also be. Yeah. All right. Okay. I think that's it. That was too fast. I hope this was not disappointing, but what I'm trying to say is, and this is actually the overall thing, what I do, no matter what I learn about trading, my first page that I showed to you, let me show you again. This one here, right? Well, as I said, I usually always focus on the logic. I don't necessarily, here as well, the candlestick patterns and chart patterns. I mean, I know the names, right? But at the end of the day, it's more about the logic. What's the logic? What's the overall logic? What's the idea? There is always an idea on the market. There is always a topic, a major topic on the market. So that means what helps me is I always ask myself on the monthly level, for example, what could be the topic of next month? There is always something going on. There is always a topic. There is always a logic. So yeah, this is useful in my case. Yeah. So, and the same for trading psychology. It's not about motivational speeches. This is something that I absolutely hate when I see people just, you know, coming up with motivational speeches such as, yeah, trading is difficult. I mean, it can be difficult for you, but why are you trying to tell people what they should believe? Maybe it's going to be very easy for someone else. You never know, right? Trading psychology is not about motivational speeches. It's about having a clear plan and a clear strategy for situations, right? Yeah. Are you working with algos and fundamental? Yeah, as I said, I mean, not with algos, no, but with fundamental data, in the sense of I keep an eye on fundamental data. Yeah, just in the that, you know, I'm not a massive fan, not gonna lie, because people say, well, as a technical analyst, you also need fundamental, you know, analysis. I do agree. I mean, I do it. I keep an eye on the fundamental data, but on the other hand, not going to lie, I mean, this is something, this idea that I had, and I have placed my trade in the region of, you know, 36, very close there, and I knew that this was something that the technical or from the perspective of technical analysis, this was already very clear that this could be an idea, right? But knowing something about fundamental analysis is very helpful in the sense of, for example, when you have a look on the daily chart, here the market slowed down, right? And then if you have no idea about fundamental analysis, you'd be like, well, what's going on, right? You'd be asking yourself, why did the market slow down on Tuesday and Wednesday, right? So you wouldn't know anything, and you'd be wondering, and you'd be thinking, well, is my strategy not working? Well, just check the fundamental analysis probably, right? So you understand, it gives you some sort of, it clarifies also the situation if something is wrong with my strategy, or if something is just going on the market, yeah, or if something is going on the fundamental level. For that, it's very useful. Yeah, I used to ignore it when I first started, but then learned about it, etc. How to get entry with a smart money, and how to avoid market manipulation and stop loss. ST hunting. I don't understand this question. ST hunting. Guys, I am very old. Most of you are very young. I don't use abbreviations that much. So explain that to me. ST hunting? That's not clear to me now. Okay, stop loss hunting. Is this what you mean? Stop loss hunting? But then it must be SL hunting. Why is it ST hunting? Anyway, if you mean, okay, stop hunting. Stop hunting. I should man. Stop hunting. Do you mean stop loss hunting? You know, tweaking and changing your stop loss. Is this what you mean? Because if you mean that, I mean, that's now a major topic to, I wouldn't know how to answer that now in I think referring to like the big but what exactly? I mean, can you explain that again to the big wigs you see? What's about that? To be kicked out to when you have your stop loss. I don't set my stop loss very. I mean, I when it comes to these psychological levels, I have two types of stop loss strategies. I mean, here I was waiting in that zone of 36. That means here I wasn't obviously going to place my stop loss. You know, I was quite clear about that the stop loss is going to be a bit bigger, because what I then do whenever I am at a psychological level, what I do is I ask the question, what I ask myself is, what is the majority going to do? Is the majority going to set it right here, right? And most people probably ask, right, because of fear that something stupid might happen. In that case, I just go lower in order to make sure not to be stopped out by market makers, isn't it? This is indeed a problem, though. Smart money hunting, retail traders, stop losses for liquidity for big orders. I don't necessarily understand. I think I have clarified the question where I set my stop loss when I'm at a psychological level, and I did this on Wednesday, and I didn't get stopped out, because my question was, what would the majority do? I don't know, maybe the majority, what I could see is, that was very interesting, maybe on the hourly level, what I could observe, and that was really stupid. I don't know what types of trader do this, but what I saw is that where was that? Oh, here, right? What I could see is people were entering right after this candlestick, right? And here I knew that, that's maybe not the best thing to do, because you either position yourself very low, right, or you don't enter here or here. That's just too late. If it's too late, I mean, nothing has happened. That's not a terrible scenario for you. Just wait for the next day and then just trade then. The positioning yourself is just one thing you may want to do, or you may want to test whether it works for you. For some people it works, for some others it doesn't. What you can do is just trade the other day, right? You don't have to position yourself at all. Yeah. So I hope it was actually useful and it wasn't disappointing. As I said, my major idea was to explain the logic, and I think I did this more or less, right? I at least told you what I do. And as I said, I focus on the type of indicators, lagging, leading. I don't trade the news itself. I try to position myself as early as possible because of an investor mindset, and try to focus on the higher time frames, and don't set the stop loss where everyone would set out of fear, right? So these are the major things I wanted to clarify today. And I really, really, really hope that it was more or less useful for you guys. I hope you enjoyed this webinar today. And as I said, I'm going to upload my handout just for you if you want to have a closer look at the topics I've taken down, and if you want to do some self-study. And I hope to see you very soon. So I think that's it for today. Yeah, take care, and just all the best for your trading performance next week.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today, and also subscribe to the A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to